Today we take a quick look at the dramatic action that has been taking place in the gold and silver markets, so let's dive on in. I'm Miles Harris and this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so do consider subscribing. So this is a slightly different video from me today. We're just going to take a look at some of the action that has been taking place in the markets this week. Let's start with gold. What we can see is that this price fall has broken the trend line that I've been following gold on since around June. We're now breaking through another resistance level, but there's likely to be further support marked below. Going into more detail here, I've just applied a 20, 50 and 200 day exponential moving average in blue, pink and orange. So we've broken through that 50-day moving average with the 200-day moving average at around 1750. This is obviously therefore a key level. If we apply Bollinger Bands, the pattern we're actually entering here is looking very similar to what we saw earlier this year in March. The widening bands just highlight the increased volatility, and while it's nowhere near as volatile as March, we've now moved outside of the lower band. It seems likely we may well go lower, but the important consideration here is that nothing has changed. The fundamentals remain entirely unchanged. While there may be delays with upcoming stimulus, they will certainly be on the horizon. They'll be coming. So nothing has changed regarding the longer term prospects for gold and silver. So what about silver? Well, we appear to be breaking through this trend line from July, having already moved through the 50-day moving average, with the 200-day moving average at around $20.37 or so. Below that we can see likely resistance at around 18.15 or so, and the Bollinger Bands suggest that if we compare this price fall with that which we saw in March, we may well be nearing a bottom because the price falls have been dramatic here. However, if gold goes lower, there's every chance silver could also be pulled down. But again, this really is just a springboard for the next leg up. You cannot gain to the extent that silver has done over the last few months without suffering on the downside. And so the impact on the gold-silver ratio has been absolutely profound here. We had previously talked about how the ratio was reaching a more volatile area, and we've certainly seen that. Resistance would appear to be around 83.5, thereafter 88 to 1. What this is clearly telling us is that silver has got to be the buying option right now. Meanwhile, the dollar, gold's old nemesis, has staged a bit of a fight back. This, to my mind, is entirely a process we've seen many times before. As IceCap Capital's Keith Dicker has said that the world seemingly consists of dollars at its heart, major currencies such as the euro and the yen on the next level out, and currencies of the emerging world a layer beyond that. When times are good, dollars flow outwards. When times are bad, demand for dollars flows inwards. We saw this in March in 2008 and as far back as during the Great Depression. And so it is that while markets have fallen this week, we can see that there has been a big move in the dollar, and that's above this key technical level, going back into 94. Now, part of the reason why the dollar has been so weak is that the euro has actually shown some good strength recently. So in short, just remember here, nothing has changed. For the medium to longer term outlook for gold and silver, this process is entirely natural and healthy for the rallies which lie ahead. It seems we're having a short term sale with perhaps a prospect of further reductions while stocks last. And some of those mining stocks do look incredibly cheap now. Yes, there's always the prospect for further market falls, but will stocks last? That's the big question. I hope this has been a useful little exploration into the markets this week. Do consider subscribing, and I look forward to seeing you next time. Bye bye.